Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio is up 8.19% year to date. And right now we do have a position in place. We have a covered call. So I'll go through exactly our positioning in this presentation, but here is the breakdown of where we stand. Our goal here at SPY Trader Now is to beat the returns of the S&P 500 buy and hold investor, but we're not doing that right now because they are up 16.39% year to date. We are up 8.19% year to date. So stay tuned. So watch us as we do our best in order to beat that return before the end of this calendar year. Here are some past returns for SPY Trader Now. And you can see we did really well in 2022, 2021, and unbelievable in 2020. If you want to see how I do this, go ahead and hit that subscribe button, ring that bell, and smash that like button down. Thank you. Last week, the S&P 500 lost 0.26% for the week. Here are the trades that we made last week. So on Monday, 8/7/23, we did a covered call on SPY. So we bought 200 shares at 448.76. We placed an in-the-money covered call to give us downside protection with the 430 strike. And when you see the charts, you'll see why that 430 makes sense. As I'm later on in the presentation, you'll see why that number makes sense to place it at that level. And we only went out 1 week, and the reason being is because by only going out 1 week, we get good time premium, especially if the market is moving sideways, which pretty much it did last week. So here are the exact trades. If you want to see all my trades going back for the last 3 years, you can head over to SPY Trader Now. There's links down below in the description. Everything that I'm presenting for you today, there'll be links for everything in the description if you want to explore anything on your own. So we placed this trade on Monday, but then on Friday, I made a decision to roll out our covered call because I just feel like we're still in the sideways market. We don't have a good direction. We don't have a clear picture of market direction yet, although I think it's going to pop up next week. But at this time, when I placed this, I decided to just roll it out again, 1 more week, short-term time duration. And it gives us also 3.46% of downside protection from Friday's close with that strike price of $430. This is what it looks like on the Thinkorswim platform. When you roll out an option, they call it a diagonal. And we got paid 94 cents credit, or they're right around that price when we did this roll. And here are some recent trades that we've made in 2023. Here is the equity curve for the model portfolio for SPY Trader Now for year-to-date 2023. Here is the equity curve for the S&P 500 buy and hold investor year-to-date 2023. This is just so slow and steady. It's usually much more jagged. So this has just been, it's just been a tear of a bull market for the S&P 500. And here are the two equity curves combined. And this is important because we need to compare ourselves against the benchmark of the S&P 500 buy and hold investor. That's in pink. Our line is in blue. Our goal is for the blue graph to surpass the pink graph. Here's the Fed Chair Jerome Powell. Last interest rate hike was done July 26, 2023, 25 basis points. Here's your federal funds rate right here. The next Fed announcement will be on September 20th. Will we have a 25 rate hike, or will we skip like we did in June 14th? My expectation is that the Fed is going to skip this one and they will do a 25 basis point rate hike on this announcement, which is November 1st. Now we are looking at things from the presidential election cycle theory, which states, depending upon which year of the presidential elections you are in, will give you historical rates of return. Currently, President Biden is in the 3rd year of his term, which equates to an historical average of 16.3%. Currently, we are up 16.3% for the buy and hold investors. So we've already meeting that, which gives us room to allow this market to come down and correct and then come back up and still be at 16% before the end of the year. Now, I usually have this slide deck in here, and it's for the bond market outlook. Well, guess what? Bankrate.com did not provide data on this week. Their computer system must be malfunctioning, so we're going to have to revisit this slide on next week's presentation. Now we are looking at things from a valuation according to current market valuation, CMV. The market is overvalued. We are at 1.4 standard deviations. Just understand that there is absolute risk in the current market. But if this continues to go up like it did from here to here, I would like to participate in those market gains before we come crashing down. Now the Fear and Greed Index, and here's our friend Warren Buffett. This is by CNN Business. Right now we've come down from last week of 69 to this week of 66, leaving plenty of room to go in either direction. Now this is a seasonality outlook. This is going back 20 years on a seasonality of SPY. Current month of August gives us a 60% probability. This is the summer doldrums right here, these next 3 months. And by the way, out of these next 3 months, the September and October months are usually the worst. We've already softened up. This month we are down 2.65% for the month for SPY. And so that gives us room to allow for a bounce in this market. Now we are looking at a 20-year chart for the S&P 500, monthly chart. Nice bull run, 2009 all the way to 2022, downward correction, broke out above this line, and we have not looked back since. This line we knew was unsustainable. We've already begun to correct down off of that. The only thing we don't know is exactly how far this will fall before reaching support and going up. But this is, from a long-term outlook, this is a bullish position or a bullish chart. Now we are looking at a weekly chart going back 5 years for the S&P 500. These are candlesticks right here. We were in this upper trading range just before we broke out above this was the old high that we haven't surpassed yet. And that happened in 2022. We did start to come close to it, but now we've corrected down. We are now back in this trading range right here. So until we break out of this trading range, either up or down, we are in this trading range. MACD, you can see, has clearly topped and is traveling back towards its signal line. Slow Stow is already below the signal line, but it is above 80. So all of these, so far, this chart is telling me sideways action until proven otherwise. Now here is an extremely important chart for me, and I want to present to you what it is that I'm looking at. This here is a 6-month chart, daily chart, S&P 500 candlestick chart. And I know I have a lot of data, a lot of different things going on here, but I'll break everything down for you. Now, the market from its low of about March 13th to the high over here, it's risen about 20%, which is an incredible bull run for the S&P 500 with very little corrections in between. So at the very high here, and then going and taking it down to the support levels here, not even at the very low support levels, but at these support levels here, I did a Fibonacci retracement. And normally you're going to retrace to the 38 or the 61.8, and we have not come down to either of these levels yet from these highs. We are currently right there. This green line is the 50-day simple moving average. That the last couple of times we came close to the 50, we never broke it, and we bounced from there and bounced from there and never looked back here and went sideways and then kind of muddled around, but then went up. So it's possible that the 50 again is going to act as that support level right now. Although we've come up such a strong amount. We were in this very bullish channel for so long that having a correction of some magnitude, and what I mean by some magnitude is we don't even have a 5% correction in here. 5% would take us over here to the 50%, about 431. So this is, and by the way, 10% corrections and 15% corrections annualized are not uncommon. They're very common in bull markets. So and now that we're in the summer doldrums, there is an expectation of correction. But this is still a bull market. The 50-day is way above the 200-day. We are trading right now just at about the 50, and we are almost at the 38.2. Not quite there, but pretty close, which is another support level. That's the first line of real support. It's going to be the 50. Second line of real support is going to be this where it bottomed out right there. That would be the next line of support. An uptrending market is when you make higher highs and higher lows, which is what we've done. Now we've made a high. We are coming down to make a low. If we break this low, that will begin to develop a market that is turning and going down. So we need to see how this low, where it develops, how it develops, and what it does after it develops. And then we need to see how the high does. The high technically would need to take out the old high to still continue on in a bull market. But we can profit even if it doesn't, and it just comes up and makes a double top, which is a pretty good probability that that could happen. Now, you remember how my strike price was $430. Well, that equates to the 50% retracement, which is also right about this second support line down. And that's only a 5.5% drop from the highs, well, not the very highs, but some pretty good trading highs right here in that range. So that would be a good place, and that's why I put that in there. I would love to pick up the S&P 500 at $430 a share. And that's why I put that strike in there, and it makes sense to me. Now, the slow stochastics did begin to come up, but the market continues to correct down, so now it's making a double bottom over here. So we need to see if this market is going to turn around. So we need to wait and see what happens on Monday. But it is possible that this market is going to bounce. It could technically go in either direction, but watch the rest of the presentation and I'll show you what it is that I'm looking at. Now we are looking at a ratio chart, which is the equal weighted S&P 500 RSP against the normally weighted S&P 500 SPY. So there's three charts here in one chart. The ratio chart is the one that has the black and red lines. The S&P 500 is the blue, and the equal weight is the lime green. Now, right now you can see that we are trading equal. The S&P and the equal weight are both traveling together. So they have joined forces here. In a nice bull market, which after 2009, we've had a nice bull run, the equally weighted surpasses the normally weighted and usually stays there for some time. Right now, the two are equal. Now, the MACD has come down to this support level in the last 20 years. Below this level, it's only reached that level 3 times as of right now, and then 2 times in the past. The last 2 times, after it has done that, the market did correct here a little bit, but then it went soaring up. Here, it didn't. After the MACD went positive, it just took off from there. Right now, the MACD is positive. You can see it clearly in the thumbnail. Now, the market has not gone up. As a matter of fact, the market has come down. So we could be experiencing one of these right here, where even though you have a MACD positive crossover, you're still softening up in the market. But once we reach that bottom, then this market is going to take off. We're going to take on more leverage when that happens. Hopefully, now this is a weekly chart, okay? So hopefully this is all going to happen after the summer doldrums. And then in the last half of this year, we're going to make up all of our losses and then some. So we can have still have a fantastic year for 2023. That's our goal. but we need to be cautious. Now, these where the S&P 500 dropped and took tremendous drops would be here and here. This happened over 2 weeks where you dropped from here to here. And over here in 1 week, you took a tremendous drop in the S&P 500. Currently, we are here. If the market is going to have 1 or 2 bad weeks or 1 really terrible week, we want to be very cautious about being in the market at that time. Now, before the market dropped here, it had been softening for some time. Before the market dropped here, it was actually in a nice bull run, similar to what you're seeing right now. So we just want to be cautious. We know we've topped here. We are heading down. We just want to see that bounce and see this go up before we take on some leverage, or before we really take on heavy positions in leverage. So we're monitoring this chart. We want to keep a close eye on this to see how this plays out. Now we are looking at the VIX, or the volatility index. We were in this low range. We dropped down to this ultra low range. We came back up. This is our volatility right there, stepping up. But look what happened on Friday. We closed below it and closed at the low for the day. We closed at 14.84, 14.84. That takes you right here in the ultra low range. And when you are in this ultra low range, that's when investors will put money into the market. MACD topped, dropping down, slow stow, heading south. All of these things favor a bounce in the S&P 500. Here's the S&P 500. So when the VIX jumped up, the market was coming down during that whole time. But now we're back in the ultra low VIX trading range. MACD slow stow heading in the right direction, meaning that the S&P 500 is going to find a bottom and come up. We would like to see that actually happen in price before we commit. So we are monitoring this, but the tea leaves are suggesting that that's what's going to happen. Now we are looking at the Think or Swim trading platform. This is a 1-year chart, S&P 500, and here we have standard deviations. Now, if you're not familiar with standard deviations, this is the +2, -2 in gold, +1, -1 in pink. I can make these colors any color I want, but these are the colors I got on the chart right now. I also have on there the 50-day in green and the 200-day in black. And then what I want to tell you is that 65 to 67% of all trading takes place between the +1 and -1. 95% of all trading, or it's 95 or 96% of all trading, takes place between the +2 and -2 standard deviation. We are currently at the +0.4 standard deviation on the 1-year chart. Now I have in here a couple of alerts to be alerted if this market begins to take off or drop down and hit this support level right here at about 426. I'm going to be alerted, because at that point in time I definitely want to close out my call option, because it's going to drop dramatically in value, and at that point in time my expectation is to hold my shares of SPY until this market comes up and capture those extra profit. Now we are looking at the 6-month chart. The same thing with the standard deviations, but on this chart you are at the -0.35 standard deviation right there, and you can see how close we are to the 50. It actually looks like there's a little tail there. Now we are looking at the 3-month chart for the S&P 500, and on this chart we are right at the -1 standard deviation. 65 to 67% of all trading takes place between the +1 and -1, and we are right at the -1, and we have the 50-day to give us support. Great opportunity for a bounce in this market. Not a guarantee, just talking probabilities here. So that is what I'm looking at. I have just given you a ton of information in this presentation. Now comes the critical thinking. What are we going to do with that information? As of August 11th, 2023, market summation, according to me, Spy Trader Now, I am your host. My name is Ken. The market looks like it's going to be an up week next week due to the Fear and Greed Index. We are at the 50-day moving average support level. The VIX has dropped to the low range, and we are at the -1 standard deviation on the 3-month chart. I went through all of that in great detail in the presentation. It is too expensive to close the call option, so we're going to let that call option stay in place. Depending upon the market action, if I see that thing pop up, I may actually dip my toe in and take a very small position for a long call because I want to participate in that up action, which I'm thinking the market is going to do. I hope you have gotten some valuable information out of this video. If you have not done so already, hit that subscribe button down, ring that bell, smash that like button down. If you want to learn more about me, head over to spytradernow.com. There'll be links down below in the description. I thank you and I wish you good trading.